And Grayscale Investments seemed to gain headway in its case against the Securities and Exchange Commission in its most recent court appearance as it looks to convert its Bitcoin trust ticker GBTC into an exchange-traded fund. But why should investors care if they're getting shares in a trust versus a spot Bitcoin ETF? Santa Clara University Leavey School of Business Seoyoung Kim joins us now. Seoyoung, thanks so much for joining us. Talk to us a little bit first about this difference between shares in a trust and spot Bitcoin ETF.
Right. Well, thanks so much for having me, Ines. Now, with the way that ETFs work, there's a redemption feature where you have these authorized parties that are going to serve as a market-making mechanism where if the shares of your ETF depart too much in value from what those underlying assets are worth, you'll have these authorized participants that step in. Now, what's happening here with the trust is that this trust is actually holding Bitcoin on its balance sheet, but now the investors who hold shares of this trust are not able to actually redeem their shares for either the like-kind money or the Bitcoin itself. Now, where that might become an issue is if investors start to have, if their faith is shaken in terms of whether or not a trust is going to be an appropriate custodian. So we've seen now numerous cases of custodians that were improper custodians. We've seen FTX, we saw Quadriga, we've seen Bernie Madoff. So it's not just a crypto problem. But if investors are worried when they can't redeem their shares and they're concerned as to whether or not you have the assets that you claim to have, that could be one reason that the value of your shares will depart from what the underlying assets that you supposedly hold are worth. Now, there are other reasons that investors may become scared, which is that during this time of illiquidity, they might become very worried with the volatility of Bitcoin. And so while so many other things in the crypto market are happening, if you're not sure when you'll be able to cash out, you might be willing to cash out at 50, 60% of the price that you think the market value of something is. And that's another thing that's happening with some of the investors where they've decided they'd rather cash out at a 40% discount. And that's where part of the departure of the value of the share of an investor's share in the Grayscale Bitcoin trust, why that's departing so much from what the underlying Bitcoin should actually be worth.
Right. Well, and it's also departed because Grayscale, right, Seoyoung has not been able to make progress in actually getting the trust converted to an ETF, which would, in theory, increase liquidity of the instrument, accessibility of the instrument, would also solve this redemption issue that you're talking about. The company's faced some lawsuits related to all of that. It seems like the conclusion of the hearing yesterday was a step in the positive direction for Grayscale. So just to sort of put it all together for us, what would it mean if it does succeed in its quest to convert this to an ETF?
So there would be a couple of things here. One is that if Grayscale indeed doesn't have the Bitcoin, then all of this will fall apart, and simply becoming an ETF won't help the price of its shares converge to what that net asset value should be. Now, the way that Grayscale is fighting for this, it seems that the belief is as long as they can get investors to truly trust that they have those assets that they have taken custody of, that they can actually trust that the trust is holding what it's supposed to be holding. Now, if an authorized participant comes on board to serve as that authorized participant who is going to redeem and also create shares on behalf of this ETF, then that'll give investors more faith that the authorized participant itself has taken a look at what Grayscale is actually doing. Because these authorized participants are going to be very large financial institutions. So we're talking about the Goldmans or the Barclays of the financial institution space that step in to serve as an authorized participant here. So that's one thing. The other thing is, of course, a lot of other players are going to step in, because the question here that Grayscale is litigating is whether or not this Bitcoin ETF is going to meet the exchange standards for listing and the SEC's criteria as to whether or not the focal point here, where the focal point has been, is there a regulated market of significant size? And the SEC decided that the Bitcoin futures market is a regulated market of significant size. And what's strange about that argument is that the Bitcoin futures market itself is predicated ultimately on a reference price that comes from the underlying spot market for Bitcoin. And so to piggyback off of the Bitcoin futures market by dint of being run by the CME, to say that that is a regulated market of significant size when you won't allow the spot market to be one of significant size is a little strange. And that's the argument that I think Grayscale has been making. And it seems like that's gaining a lot more traction than it did 5 or 6 years ago, when the first arguments for putting together a Bitcoin ETF were shot down.
Yeah, and that's what you're talking about is very similar to, it seems, just the line of questioning from some of the judges, the judge yesterday, I should say, in this case, which is quite interesting. So ultimately, and you've sort of talked about this, but just to put a fine point on it, if I'm an investor in this instrument, why do I want it to be an ETF versus it being a trust? And again, I know you've talked about it, but just to kind of tease out the specifics.
Right. So with it being a trust, now there are several ways that you can set up these types of investment companies. One, the most that people are familiar with is the mutual fund concept, where with a mutual fund, you can never have a departure from NAV. A mutual fund is highly regulated, and anytime a single investor wants to redeem their shares, they get to do it at what we call the NAV, which is the net asset value. So the mutual fund is holding on to a lot of different types of securities, and whatever is the pegged closing price, whatever is the total basket of what those securities should be worth at the end of that trading day is what I would be able to redeem my mutual fund share for. Now, if we depart from that and go into more of a closed-end fund structure, that's the way that Bitcoin, that's the way that the Grayscale Bitcoin Trust has currently been operating, which is very close to a closed-end fund where they have a trust that's actually holding on to this Bitcoin. And now they've issued shares, and each share represents a fraction of a Bitcoin. Now, where the departure from that model versus the ETF comes in is that Grayscale is not required to redeem shares. So I may hold shares of the Grayscale Bitcoin Trust, and if I want to cash out, the only way for me to do that is for me to sell my shares on the secondary market. But I can't go to Grayscale and redeem those shares myself, either for the cash equivalent or for the Bitcoin itself. Now, the move to an ETF is a bit of a hybrid where you have a large financial institution that's stepping in to serve as this function to allow investors to redeem their shares by way of this authorized participant. So what the authorized participant would do is if Bitcoin is trading at a higher value than what the shares of the ETF are trading at, then this authorized participant will want to create more shares of the ETF. They'll go out and buy Bitcoin, deposit it in the trust, create more shares of the ETF and sell those shares. So you'll start to see the value of those shares converge to what that Bitcoin is worth. And now at the same time, if those shares start to become worth less than what Bitcoin is worth, then the authorized participant will do the opposite. They'll go out and they'll purchase shares from investors, and then they'll redeposit those shares because only this authorized participant has the institutional size to collect enough shares. And now the trust will be required to redeem that large quantity of shares that the authorized participant is coming up with. And the trust will, in that point, as an ETF, be required to redeem. So now that authorized participant will get the Bitcoin and will be able to sell the Bitcoin in the open market. So that's the mechanism here that would be keeping the prices closer in line. That's not happening right now with a closed-end fund-like structure that Grayscale is operating at.
Thank you so much, Seoyoung, for breaking all of this down for us. Santa Clara University Leavey School of Business's Seoyoung Kim on Bitcoin ETF products and specifically Grayscale. Thank you so much. Appreciate it.